What is going on, you guys, and welcome back to another video. If you're new here, my name is Brandon. As always, we do have the Investing Academy as that first link down below. Today we are going over two stocks that I've personally been buying during this stock market downturn. Actually, I looked back and these were the two positions that I've been adding to the most. We got a Canadian and a US stock selection for you guys. If you enjoyed, give this video a big thumbs up. But we're gonna be starting here with stock number one. It is the company Toronto Dominion Bank. Ticker TD.TO, massive plane flying overhead. Today's shares are trading for $87 Canadian per share. They pay a beautiful 4% dividend and the PE ratio is sitting at 10.22. Now, TD, as you guys now know, is the second largest position in my entire portfolio, yet I've still been adding to it. I hope that goes to kind of show you guys how confident I am in a stock like this. Yes, across the board, bank earnings are down, so year over year down about 9%, but they did beat on expectations. I mean, that's really what matters. We did see a nice pop about a week or so back. What I personally love about TD when looking at the big bank options here in Canada is, first and foremost, I am a customer. I am a client of TD, and that's just a bias in and of itself. But TD is obviously a Canadian-run bank with great foreign exposure. In particular, the US is what I'm looking at. Their expansion to the United States has been a very successful venture thus far, with about 36% of net income coming from US retail alone. This bank, like others, does provide the full range of financial products and services. 27 million customers worldwide. Given the state of the current economy and all the uncertainty that we are living with as investors day by day with interest rates, inflation, yada, 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 adding to a reliable company such as TD Bank is something that brings me a lot of comfort. In my opinion, this is a stock that, in all honesty, you can buy when it's going up, when it's going down. You do this over the next 10 decades, you're probably going to do very, very well. The data does suggest that. I do believe that now is one of those more opportune times. And here in Canada, our system essentially runs through the banks. Let's not forget that. Whether it's through financing, debt, our entire nation runs through these banks. I feel they're very safe coming out of the 2008 credit crisis. When we look at things like regulation, I think the banks actually honestly learned a lot from that. And we have all these policies in place now for the banks to be that much more secure. And the Canadian banks already did very, very well during the last real crisis. In my opinion, just FYI, I do believe that the Canadian banks are far superior to any counterparty over there in the US. For a Canadian investor, I don't see any reason why you would go beyond Canada when we have such amazing companies, such amazing stocks to be investing in here. Today, the PE ratio at TD Bank sits at about 10.22. I love this. And despite the share price growing and this stock appreciating over the years, we see that earnings have been improving very strongly, pretty much right in alignment. In fact, we're looking at a similar PE than we were about a decade ago. So TD's been trading in this range of about 10, and that is something that is just so attractive to me. As mentioned, today you're looking at the 4% dividend yield. I don't want you guys to take that for granted. A 4% dividend yield on a reliable company like this with the opportunity for capital appreciation. This stock has been compounding their dividend at 11% since 1996. That's 11 years of growth. FYI, COVID year aside, this number may slow given just the landscape of our environment, and it has been raised a little bit slower over the past number of years. Nevertheless, a great dividend growth play here. TD's a stock with over 100 years of dividend history if you were not familiar. I got nothing but love for the Canadian banks, and I'll happily add to this position, securing my 4% dividend yield today. Today, the shares are trading at $87.50 Canadian. That's the Canadian stock that I've been personally adding to the most. It's the company TD Bank. The second stock that I have been adding to is over in the US market. It is the company Meta, aka Facebook, today trading at $164.91 USD. Note the PE ratio sitting there at 13.4. Wow. But I'll start the segment off by giving my thoughts on the metaverse. Do I believe that we are going to be living in the metaverse? Is our society going to be all digital, all virtual in the next number of years? Absolutely not. This is a long-term vision, a long-term game that we're talking about here. In fact, if you watch the Joe Rogan podcast with Mr. Zuckerberg on it recently. Awesome episode, tons of insights. It's quite clear that over the short to medium term, really virtual reality, VR, AR, or augmented reality, these are some of the short to mid-term milestones that we're really going to be focusing on. Living entirely in the immersive metaverse, that is still decades and decades out to come. But clearly, we've already seen actually a lot of progressions with this. Whether you guys have seen the ads with the Ray-Ban and Meta collection, being able to take stories and essentially have a computer within your glasses that is already here and live. Of course, they have the new Oculus headset coming out in just a couple of months, which I've heard very good things about. Why I personally really like Facebook, beyond the exciting future, really comes down to the numbers right now. Today, sitting at a PE of 13.4. This is a fascinating chart to me. If we tracked Facebook going back a number of years, they've always traded, and this is a forward PE basis, by the way, but they've always traded in this band of 20 to 30 times. Now, yes, the market is dropping, but here we see Meta dropping down into that 15 to 17 times range. If we were to compare this against the other FANGs, well, to me, it is clearly standing out. And just FYI, forward P in this case would be actually higher, not what we've seen over the past number of years. Typically, we see the trailing PE being actually the higher number because earnings are growing. Well, given this current landscape and environment, we are seeing earnings actually expect to slow. We'll take a look at that in just a second. But for a company that has been growing, and let's just put it that way, 28% growth over the past 3 years. Yes, they did just post their first loss, actually a decline in numbers. And I know that was all over the headlines, but to me, this is still very impressive and a PM well worth paying. Note here in this chart that we see that although the revenues have come down, the users continue to slowly grow. People on the platforms are still there. And Facebook is a company that, as you guys may or may not know, essentially operates with virtually no debt. In fact, funny enough, just last week or two, they announced their first bond offering ever. Since IPO, this is their first bond offering for about $10 billion. It goes to show that this company has essentially been operating with very little debt financing. And I think that is very, very important when it comes to a company that is going to be innovating. One thing to understand is when venturing into a new technology space, especially one as complex and as costly as VR, AR, or the metaverse, this is going to require quite a bit of upfront capital. And in fact, Facebook announced that this year alone, they're likely going to be spending in the range of $10 billion putting towards this investments, research and development. This is going to span across all of those different areas, kind of parts going here, there, and everywhere. Nevertheless, $10 billion is a lot of money. To put this in perspective, however, and I think this is really what's valuable, we look at $10 billion and think that's just outrageous. But when compared up against their operating profits, if we just took a look at what their family of apps is, we already know Facebook, Instagram, WhatsApp. If we took a look at the operating profits, this is less than 20% of that they are putting towards these new ventures. Whether you like platforms like Facebook, Instagram, or WhatsApp, and whether you use them on a day-to-day basis, it's very hard to argue with the numbers and the statistics that these are still growing platforms across the globe with over 3 billion users across their family of apps. Yes, you could argue that numbers are slowing, which indeed they are, but let's not forget, they've already captured such a massive audience. They've already captured the eyes of the public on these various platforms. It's quite natural that as a company scales, there is going to be diminishing returns, if you will, as you get this big and this scaled up as a company. What's important to me about that is that if you're an investor that is able to look past the scary articles, look past the headlines of an out of favor stock, which is really Facebook, that's a very good way of putting it right now. They are out of favor. It is hard to argue with the number of eyeballs that they still control and will continue to control going forward. And from a business perspective, that's more advertising dollars. Companies are still going to resort to Facebook and Instagram to run their small business ads, to run their big business ads and put their budget there. Facebook is a company that, in my opinion, is already self-sufficient as is, not even talking about the metaverse. Like just looking at their ads business, it was a company that I was happy with. And to be able to be in a position financially where they can take money and they can afford to invest these massive dollar amounts into the metaverse, into VR, and into what they believe the future is going to be. For me as an investor, especially trading at a PE of 13, this is a price today that for me is very, very attractive. And you do have the opportunity of them hitting it big in the metaverse, again, falling back on a very, very successful ads generation business in the meantime. So with the stock trading at $165 USD, Meta is another stock that I have personally been liking, and it's been one of the stocks that I've been adding to the most. And if you guys enjoyed today's video, I would just appreciate you giving it a big thumbs up. I know I haven't done many stocks to buy videos recently. Are you guys just complaining about it? Oh, all you do is talk about stocks to buy, so I didn't talk about them for a little while. But I miss talking about them. And what I thought was, I'm going to talk about, rather than just giving a bunch of ideas, because people complain that you don't even own the stocks, whatever the case is, I'm just gonna share with you guys for now stocks that I own. And I literally own both of these. Second largest position, one of the biggest positions that I'm actively building up. At least I hope that's able to give you guys some comfort and transparency in that these are stocks that I own. And I'm only talking about stocks that I'm buying. Nevertheless, if you do enjoy these types of videos, giving it a thumbs up is a great way of letting me know. Make sure you are subscribed if you're not subscribed already. I'm very curious to know what are the stocks that you guys have been buying. Feel free to leave them down in the comment section below. And of course, as always, if you are in the market for courses and training and you live right here in Canada, take a moment and check out the Investing Academy. That is that first link down below. You can join our community of Canadians who are all working together. We're all striving for financial freedom together. We're all learning how to invest properly, DIY in the stock market, all in a community environment, all having a blast each and every day. That is that first link down below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.